Howdy, y'all. Welcome to Liberty Call. Today is Friday, October 13th, 2023. Friday 13th. Woo, scary. Hope everybody's doing well out there and staying safe. There's kind of that global jihad going on right now. So you can stay home today and stay out of trouble. So looks like the markets were quite angry today. Lots and lots of red across my screens here globally. So looks like the world was not in a good mood. I mean, got a lot of stuff going on right now. You got all the problems in the Middle East, you got the problems in Russia and Ukraine, you got all the domestic stuff going on here. We got financial problems, with the government. They way overspend. So where are things going? Who knows? But being prepared is probably the best thing you can do. So, all right, if it is your first time watching Liberty Call, I'm glad you're here. Thank you very much. If you could do me a favor, give me some thumbs up, like, share, subscribes, and follows. Press the notification bell. You want to know when I go live. All right, let's go ahead and get into the numbers for today. Dow Jones, one of the few bright spots, is still in the green. Closed up 0.12%, 39 points. It closed at 33,670. The S&P 500 was down 0.51%, closed at 4327. NASDAQ down 1.23%, closed at 13,407. The VIX was up 15.1% today. It's currently up to 19.21. Canada down 0.19%, Brazil down 0.96%, Mexico down 0.72%. In Europe, Germany was down 1.55%, the UK down 0.59%, France down 1.42%, the Netherlands down 1.03%, Spain down 1.1%, Italy down 0.9%, Switzerland down 0.72%, and Portugal down 0.73%. Russian exchanges both green, MOEX up 0.56%, the RTSI up 0.75%. And the Nikkei in Japan was down 0.61%, Australia down 0.56%, New Zealand down 0.62%. In China, the Shanghai was down 0.64%, the Shenzhen Component down 0.99%, the China A50 down 1.15%, the DJ Shanghai down 0.74%, and the Hang Seng down 2.73%. All right, so like I said, quite ugly out there in the investment world today. Let's go ahead and look and see how the markets did for the week, starting out with the Dow Jones. Looks like it's going to finish the week in the green, up 0.84. The S&P 500 looks like it's going to finish the week up about 0.61. The NASDAQ up about 0.45. Dow Transports going to finish down about 0.38. And the Dow Utilities, where are we? Here we go. There's the bottom of the candlestick. And up 3.14%. So that is the one bright spot in the major indexes. So let's go ahead and zoom out and take a look at the current trend we're in right now. Add my lines back here. All right, so if we start this current cycle we've been in really since the downtrend began last January in 22. The Dow was in a downtrend. You can see this resistance point that it kept bouncing off of. It did finally break through fall of last year, about a year ago. It was sideways. We did see a little bit of an upward trend here in the summertime with the hopes of the Fed ceasing rate hikes, which if you've been paying attention to the news in the last week or so, that is probably not going to happen anytime soon. And we broke this resistance line here on the downside on the 20th of September, which was when the Chairman Powell spoke, and also when we had the bear sighting here at DSA Financial Group World Headquarters. So we shall see what happens. But if this downtrend we've been in since the beginning of August continues to strengthen and line up, we could be in for a bit of an ugly winter. All right, so let me get that off the screen. Let's go ahead and get to the economic data for the week. Starting out with jobless claims. Initial claims came in at 209,000. Forecast was 210. Last week's number was 209. Continuing claims came in at 1.702 million. Forecast was 1.68, so not too far off. Last week's number was 1.672. So still right in line with current trends. The producer price index year over year grew at 2.2%. Forecast was 1.6, so a little hotter than forecast. Last month's number was 2% even. The month over month number grew by 0.5%. Forecast was to grow by 0.3. Last month's number was a growth of 0.7, so it did recede a little bit. The consumer price index year over year grew at 3.7%, slightly above the 3.6 forecast, and same as last month's number. The month-over-month number was 0.4% growth, and the forecast was 0.3. Last month's number was 0.6, so a little bit of a pullback there. And the last data point this week, the U.S. consumer sentiment came in at 63. Forecast was 67. The previous number was a 68.1. So, and you can see here we've been trending down since about, looks like July was the peak, and then it's been trending back down into the 60s since then. All right. So that's all the economic data this week. You're welcome to, go to investing.com and go to their economic calendar, and you can look at all that stuff. There's a lot more in there. All right, let's get to the market recap. S&P 500 slips as tech slump offsets jump in banks amid strong earnings. Yeah, the commodities markets were through the roof today. Gold, silver, oil. I mean, everything was just jumping. Probably, again, with all the nonsense going on around the world. Alrighty, on Friday, the S&P 500 experienced a decline as weakness in the technology sector offset gains in Wall Street banks following strong quarterly results. Major banks, including JP Morgan Chase and Wells Fargo, rallied after better than expected earnings for the third quarter. JP Morgan, in particular, saw a 35% increase in earnings, driven by a surge in rates that boosted profits in its retail banking unit. However, Citigroup gave up gains and traded lower. Energy stocks saw a notable rise, climbing over 2%, propelled by a surge in oil prices. This increase was attributed to the U.S. imposing sanctions on two tankers carrying Russian oil, which breached the G7's $60 per barrel price cap. Geopolitical tensions, such as Israel's preparations for a ground assault in Gaza, added to the upward pressure on oil prices. Companies like APA Corporation, Marathon Oil, and EOG Resources were among the top gainers, rising more than 3%. Dollar General announced the appointment of former CEO Todd Vassos as new CEO of the company, leading to a more than 9% increase in its shares. Wall Street responded positively to this leadership change, anticipating increased investments to navigate the challenging consumer spending landscape. Despite being down 50% year to date, Oppenheimer expressed confidence in Dollar General's outlook. However, big tech companies, including Apple, Meta, and Alphabet, and Microsoft, exerted downward pressure on the broader market. Chip stocks such as NVIDIA faced additional pressure due to concerns about potential U.S. restrictions on chip exports to China. Reports suggested that the White House was considering options to prevent Chinese firms from accessing U.S. companies' artificial intelligence chips. Netflix experienced a nearly 2% decline on its shares after Wolfe Research downgraded the company to peer perform from outperform, citing valuation concerns. The downgrade came a week ahead of Netflix's third quarter earnings on October 18th. In other news, Microsoft completed its $69 billion acquisition of video game maker Activision after receiving final approval from the UK Competition and Markets Authority. This acquisition was completed ahead of the October 18th deadline, and Microsoft addressed antitrust concerns by agreeing to sell Activision's non-European cloud streaming rights to Ubisoft Entertainment. All right, so that's everything in the market recap. And I got one last article here before we wrap up the week. Comes from the Mises Institute, their Mises Wire. Article's titled Mark Thornton Explains the Yield Curve, Soft Landings, and Today's Bubble. And then the top part here, in recent months, senior fellow Mark Thornton has been covering today's economy in detail in his Minor Issues podcast. So we asked him some questions about where the economy is headed now. Let's get to my summary here. All right. Mark Thornton, a senior fellow at the Mises Institute, discusses various economic aspects, starting with the skyscraper curse as an indicator of bubbles and malinvestment in the economy. Thornton notes that while the skyscraper index might appear to be broken, attempts to build super tall skyscrapers in China have faced difficulties or long delays. The skyscraper curse, which suggests that the construction of even taller buildings indicates economic bubbles and malinvestments, is fallible and imprecise. In terms of current bubbles, Thornton highlights the everything bubble, which has affected various sectors, including real estate, finance, and consumption-related industries. The prolonged economic boom since the global financial crisis has been fueled by unprecedented monetary and fiscal policies. However, Thornton argues that malinvestment resulting from this artificially induced investments are not profitable, rational, or socially beneficial in the economic context. Thornton suggests that a crash landing is needed to stop malinvestment, quickly resolve past malinvestments, and prompt a rejection of the mistakes made in the monetary and fiscal policies. He refers to the example of the Depression of the 1920s, when raising interest rates and cutting government spending led to a quick recovery. Regarding the current business cycle, Thornton points to the inverted yield curve as a major indicator of financial distress. Despite concerns about consumer prices, he emphasizes the significance of producer prices and the challenges faced by businesses dealing with higher costs. Thornton acknowledges that the Fed's power, but questions its ability to achieve a soft landing, expressing skepticism about the central bank's understanding of the real economy and its apparent lack of concern for the productive classes. So, it's a pretty good article if you want to read it in its entirety. It is the last article linked in the show notes, so feel free to do that or any of the other linked subjects here. So, all right, well, that's everything I had for today. I hope everyone has a fantastic weekend. The championship series gets started in baseball. Well, the Astros start on Sunday, and then the NL starts on Monday, so that's exciting. So we also got some college football. Unfortunately, the Seminoles are playing early tomorrow at 10 o'clock. Who wakes up at 10 o'clock on a Saturday? Not this guy. So anyways, all right. Well, hope everyone has a good weekend, and I will talk to you guys next time. If you do need anything from me, please go to dsafinancialgroup.com. All my contact information is there, and I'll talk to you next time. Adios.